Good afternoon, this is Holly live from 𝐊𝐶 studio. It's lunchtime here in Sydney and you know what that means, it's time for the mid-market pulse. Let's zoom our lens on over to the Australian share market performance midway through today. Australian shares continue to trade lower by the afternoon while reversing most of the opening losses. Weak global cues and alarming COVID-19 surges in the country dented the market sentiment. The announcement of Victoria's fifth lockdown and a rise in daily case tally also pushed the market lower. The S&P ASX 200 was trading near the baseline, down just 4 points. Gains in realty, healthcare and utilities stocks helped the index pare early losses. Earlier today, the benchmark index opened lower and declined as much as 0.3% to hit a low. Concerns about the COVID-19 situation in the country continued to weigh on the market. In the last 24 hours, New South Wales reported 97 new locally acquired cases compared to the 65 registered on Wednesday. On this note, let's see how the sectoral indices are performing. 6 of the 11 sectors were trading lower, led by tech and energy stocks. The IT sector extended losses for the third consecutive session. And renewed concerns about the global pandemic outlook spooked demand for growth-driven stocks. In the tech space, BNPL firms continue the losing streak with perceptions of rising inflation as well as a fear of competition from global players alarmed investor sentiment. Australia's largest BNPL firm, Afterpay, Zip and Split Payments were trading lower as well. In a similar trend, ASX-listed energy stocks also witnessed selling pressure owing to a fall in crude oil prices. Beach Energy, Santos and Oil Search were all trading in the red zone. And bucking the trend, A-REIT, healthcare and utilities as well as industrial and consumer discretionary stocks were all trading higher with marginal gains. And let's turn our attention now to the biggest gainers and losers that captured investor attention by the mid-market session today. It may be Friday, but not everyone is smiling. Shares of Pacific Smiles were trading 0.8% lower at $2.55 after the company issued earnings guidance for the financial year 2021. Australia's leading network of dental centres expects patient fees of approximately $240.8 million. It's 29% higher than the previous year and at the top end of our previously advised guidance range. The underlying EBITDA has been pegged at $33.1 million, towards the lower end of the previously advised guidance range, representing growth of 41% on the financial year 2020. According to the company, results have been impacted by the combined effect of the COVID restrictions introduced by the Victorian government for Melbourne at the end of May for 2 weeks and those currently in place in New South Wales. Next up, the share price of AMP dropped nearly 1% to $1.10, even after the financial services company confirmed the National Corporate Regulator will take no action against the company. The company said that Australian Securities and Investments Commission, or ASIC, will take no action in relation to either the processes or reporting of the historic fees for no services conduct associated with AMP's buyer of last resort arrangements. And we've got another tumble today as shares of Rio Tinto fell over 1% to $129.75 after the global miner raised its full-year iron ore production cost guidance, citing a spike in labor and input costs. The mining major also reported a drop in quarterly shipment due to higher than expected rainfall in the West Pilbara region. The world's biggest iron ore producer shipped 76.3 million tonnes of the steel-making commodity in June quarter in the financial year 21, compared with 86.7 MT a year ago in the period. Production for the quarter declined by 9% to 75.9 million tonnes. And now let's take a small break, but stay tuned with me and I'll be back in just a moment.
Hi, this is Andy Liu broadcasting from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Media Studio in Australia, and I'll be hosting the new 𝐊𝐚𝐥𝐤𝐢𝐴 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐚𝐥𝐤𝐢𝐴 TV and join me.
Welcome back, I'm Holly, live from 𝐊𝐴 Studio in Sydney, and you're watching the Mid-Market Pulse. Good news for those with a case of baby fever. Shares of fertility research and treatment firm Monash IVF rose 1.2% to 83 cents. According to the report, the fertility research firm are likely to benefit from a sharp increase in vitro fertilization volumes, a reproductive technology used for fertility treatments and gestation surrogacy. There's a rise in the number of women seeking assisted reproductive services in Australia following the COVID-19 pandemic. So interesting connection there. And maybe now's the time to put a ring on it, because the share price of jewellery retailer Michael Hill International rose 5.5% to 86 cents after the company reported strong sales growth for the full financial year 2021. The sales rose 10%, with the same store sales growing 8.6%. Online sales surged 51.1% for the year and topped the $30 million for the first time ever. And it looks like the Kiwis are still flying high, as shares of Auckland Airport rose 0.5% to $7.05 after the company released monthly traffic updates. The airport reported 747% in growth in the total passenger volumes in May of 2021 versus the same time last year. International passengers rose 778, while transit passengers were down 73.3%. According to the company, services for May were also up on the prior year, indicating a surge in domestic activity and international passengers transferring to domestic flights due to the border closure in the wake of the COVID-19 pandemic. And next on the ASX listed share, the stock price of investment management firm Navigator Global Investments dropped 5.6% to $1.68, following a business update for the June quarter. The company reported net outflows of $130 million in June quarter, but its investment performance added $350 million. The firm's assets under management stood at $13.9 billion at the end of the June quarter. And one gold miner isn't good as gold at the moment. Evolution Mining saw a fall in its share price of over 3% to $4.08 following an ASX update. The company raised its 3-year gold production forecast to 900,000 ounces after revealing plans to develop its Cowal underground mine. Meanwhile, the miner has posted group cash flow of $327 million for the financial year 21 on gold production of 680,000 ounces and over. And next up, the new lockdowns are taking no prisoners, as the share price of Crown Resorts were trading marginally lower after Australia's largest gaming and entertainment group issued an update on operations. The company said that it had closed its Melbourne gaming, retail and dining facilities during the state's 5-day lockdown. Its hotel facilities, however, will continue to remain open, as Crown Sydney has been partly closed since the 28th of June until at least July 30. In line with the extension of New South Wales government's stay-at-home orders across Greater Sydney. And now, time for another small break, but stay with us because I'll be right back in just a moment.
Crypto talk by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, 𝐬𝐷𝐞 and Ethereum. If the crypto market excites you, tune in with me, 𝐲𝐳, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞. Crypto talk by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, 𝐬𝐷𝐞 and Ethereum. If the crypto market excites you, tune in with me, 𝐲𝐳, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞.
Welcome back from the break. Holly here, live from 𝐊𝐴N Studio in Sydney, and you're watching the Mid-Market Pulse. Shares of real estate company Ingenia Communities Group rose 3% to $6.05 after the home builder issued robust guidance for financial year 2021. The company expects this year's earnings before interest and taxes to rise 30% on the prior year. It said new home settlements of 380 would be up 17% on the last fiscal. The company's group CEO Simon Owen said that the business delivering such a strong outcome despite the challenges of the last year reflected the momentum across the business and a diversity of earnings. And next up, INEX Healthcare shares climbed 5.5% to 28.5 cents after the pharma company said it had engaged ProCap's production of IHL 675A. IHL is an anti-inflammatory multi-use drug product with ProCap's proprietary patented Unigel technology. And there's a new face in the CEO's chair at Greenvale Mining. The mineral exploration firm has appointed Matthew Healy as the CEO, effective from the 1st of September this year. Healy is a highly experienced geologist and an Australian mining executive. His appointment comes as a part of GRB's initiative to build its senior leadership team. According to GRV, it's looking to include the appropriate skills, experience, and talent amongst company leadership. And moving on in the final leg of our show, let's focus on the global equity market performance. In the overnight trade, Wall Street ended mostly lower as concerns about rising inflation kept investors cautious. In a choppy trade, the Dow Jones settled with 0.15% gains, while the S&P 500 slid 0.33%. And the Nasdaq Composite closed 0.70% lower. Now to turn our heads east to the Asian markets, most of the regional stocks were trading lower, tracking weak cues from Wall Street. Japan's Nikkei was by far the worst performer in the region, falling over 1%, while China's Shanghai Composite was also down 0.2%. Seoul's Kospi also traded lower by 0.7%, but bucking the trend, Jakarta's Stock Exchange Composite Index rose 0.3%, and Singapore's Straits Times was also up 0.25%. So it's safe to say that at least half of Asia is on the up and up today. Alright then, that is just about all for now, but stay tuned with 𝐾ALKINE TV for more live market updates. We'll be back with more news on markets, economies and diverse themes and sectors. Holly Shields signing off.